Hey friends, this is Mansoor Suhail from My Learning Center. Let us talk about the accounting vocabulary definitions today. It is easier to make connections between what you already know and what you are attempting to learn when you are learning something new, such as accounting ideas and words. It is similar to learning a second language in that deciphering new words is a component of learning process. When trying to translate the Spanish term necesario, for example, you might come up with necessary, and you would be correct. What about the color white? Blanco means blank or white. Blanco refers to the color white in Spanish. Make some logical links between the accounting terminology terms. Consider the term accounting. Essentially, the accounting system is a simple tally of what occurs in your company. Now it is time to talk about transactions. Transactions are the day-to-day business activity or acts that add up to your expenses and income. Consider the term transactions. Business activities are referred to as actions, while trans refers to crossing or passing across. These are the fundamental components of an accounting system. Transactions are to accounting what raw materials are to a factory or gasoline is to your car. They are real, and how your accounting system handles them has an influence on your business. You must maintain track of your transactions in order to figure out how much money your company made and how much money it spent. Doesn't it seem self-evident? Inquire with your bookkeeper or accountant about how evident certain transactions are. If you are not sure what happened during the transaction or how you want it recorded, it might rapidly become complicated. If you are a carpenter, for example, you may spend cash for a bucket of nails to create handcrafted wooden deck chairs. Because the nail purchase constitutes a transaction, it must be recorded as a business expense. The chair is then assembled in your workshop using a pneumatic nail gun, sandpaper, stain, and varnish. You deliver the chair next day to a customer in a nearby town. You give the consumer a sales slip and they write a check to you. That is also a transaction. When money is spent or received, the transactions are easily visible. Did you, on the other hand, observe the other transactions? The stain and varnish, as well as the usage of nail gun and chair parts, were all included in the deal. What about the fuel and truck that delivered the chair? Were there any nails left over, or did you use them all? The sandpaper may have a little life remaining in it, but it's no longer new, is it? We are missing a piece of the puzzle, a crucial one, if we do not account for those charges. This could affect how much money you have at the end of the year. Try to think in terms of transactions in all your business activities, because if you know what transactions happen in your company, you will be able to organize them in a useful way. Take a moment right now to make a list of all the transactions that occur in your business each day, week, and year. It may appear frugal to think in terms of transactions all of the time, but it is critical to be cost conscious and honest with yourself about all your transactions. It is crucial to your business success. Customers and suppliers are the ones who initiate some transactions. Other transactions may take place within your company or in the back office. When the bookkeeping department adjusts your books for year-end concerns like machinery depreciation or inventory shrinkage, transactions are created. What is depreciation and how does it work? Let's imagine you spent $27,500 on a new car, a 2006 Toyota. The car will have some dings on the doors, tire wear, seat stains, and 20,000 miles on the engine next year. Do you realize your car is no longer worth $27,500? This indicates that your car has deteriorated in value. You can deduct the lost value of business-owned equipment as a business expenditure. Although you did not pay cash for the lost value, depreciation is a transaction that your bookkeeper or accountant will force you to complete at the end of the year. It helps you with your taxes by boosting your expenses, just like any other cash transaction. Depreciation, on the other hand, indicates your equipment is no longer worth as much. You must be careful and thoughtful about what your genuine expenses are in order to have a clear view of how your firm is running. Even though it is not cash transaction, depreciation is a real cost. It takes time and practice to see transactions for what they are. Because transactions have such a broad impact on your firm, you must examine the small details on a regular basis in order to piece together the overall picture. Folks, thank you for listening. Visit us at https://my-learning-center.teachable.com for quality ebooks, audiobooks, and HD video courses. Join our Facebook group, My Learning Center, and subscribe to our channel, My Learning Center, on YouTube.